Welcome to NDTV and BQ Prime's special segment, Let's Talk Business. I'm Parmeshwar Bawa, and this is where you can catch the top news stories from the world of business and finance. Well, the party on Dalal Street continues. Markets began the week with fresh highs. PSU and private banking sectors advanced in trade, whereas auto and realty shares were under pressure. Alex Matthew joins us with a wrap of all the market action. Over to you, Alex.
You can't ever get tired of saying it. The Nifty 50 hitting a fresh record high in trade today. 19,731.85 is the new all-time high, and we've ended just about 20 points off that mark. And that itself is a gain of about 150 points over Friday's close. Now, what was the key today, of course, was that the banks performed in a big way. They were a large contributor. State Bank of India, the top performer on the Nifty 50, gaining about 3%, and the entire PSU banking pack was up over 2% in trade. Even the private banks performed. We'll get to that in just a bit. But one of the factors that has proved very supportive for Indian equity markets has been the foreign institutional investors that have continued to pump money into the equity markets here in a very big way. Today, more than anything else, the Indian market comes into much sharper focus in the context of slower than expected economic growth in China. Now, as we move to the key contributors, I mentioned the Nifty PSU Bank Index, the Nifty Bank as well, gaining ground. But you also saw the likes of Nifty Pharma as well as Healthcare gain about 0.7% each. The Nifty IT Index also gained ground in the early part of the session. It hit a fresh 52-week high, and then it lost ground towards the end of the session. The key movers on the Nifty 50, you had SBI, as I mentioned, the top gainer, Dr. Reddy's Laboratories, Wipro, Grasin, and HDFC Bank made a strong debut as a combined entity, trading for the first time in trade today, of course. And you also saw the earnings for HDFC Bank come in, and it was a strong 30% growth in net profit for the standalone entity. Remember, this is not the combined entity yet. Among the key losers, you had ONGC, which lost ground as the windfall tax that is imposed by the government on crude producers in India was brought back. You had Hero Moto, Titan, Tata Motors and Bharti Airtel that also lost ground. Z Entertainment gained about 7%, one of the stocks of the day, no real trigger there. On the other hand, Bandhan Bank has lost about 2.7% on weaker asset quality in the first quarter. And Avenue Supermarts, it dropped about 3.5%, and this is on account of a miss on the earnings. Both the margin as well as the PAT number came in much below consensus estimates. But all told, it's a positive, and the bulls are on quite the ride.
Meanwhile, JSW Energy slumped in trade today. This after the company's profit and revenue declined in Q1 of FY24. While profits slumped nearly 48% on a year-on-year basis, margins expanded. BQ Prime's Neeraj Shah spoke to Prashant Jain of JSW Energy about their quarterly performance. Here's what the MD and CEO of JSW Energy had to say.
Neeraj, we need to look at the seasonality and various other aspects into the business. Like, our thermal assets, they did pretty well, except the Badme where there was a scheduled maintenance. But it doesn't make any difference. The entire EBITDA loss will be recouped in the rest of the quarter. Same is in case of the hydro assets. The generation was lower, EBITDA was lower, but the entire EBITDA will be recouped in the rest of the 3 quarters. So, all in all, if you look at the performance-wise, around 110 crore of the EBITDA, which is going to be recouped over a period of next 3 quarters, because of that, around 80 crore is from the hydro and thermal, and 30 crore of the Mitra, which has been into the system itself, but it was just simply because of the consolidation of some of the SPVs. So as a performance-wise, our EBITDA improvement is close to 29-30%. So that's pretty handsome. Profit after tax, you are comparing, but you need to see that there are the one-off interest costs which is coming up for the refinancing of the asset. There are certain interest components which is because of the refinancing. Ind Bharat is not performing because that interest is coming at this point of time, but the asset will be going into the operation sometime during the current financial year. So all in all, the I'm very happy with the performance of the for the company during the quarter. We are on course of performing very handsome EBITDA improvement and PAT improvement during the current financial year and going forward.
And the earnings season is in full swing. Today, HDFC Bank reported its numbers for the June quarter. The bank's net profit saw a 30% rise from a year ago. After beating street expectations in the first quarter, the stock was up nearly 2% in trade. My colleague Vishwanath Nair is here with the numbers.
HDFC Bank, which is now the largest private bank in the country as well as the second largest lender in India, has reported a 30% rise in its net profit. Net profit for the quarter ended June 30 came in at about 11,950 odd crore, which was a pleasant surprise for the market because immediately after the numbers came out, the stock did rise about 2%. What we do know from the numbers is that HDFC Bank's improvement in the net profit situation is primarily because of an improvement on the core income side, which is the net interest income, which rose about 21%, as well as the lower provisions aided the net profit. On the asset quality side, the numbers were slightly disappointing. There was a 5 basis points rise in the gross NPA ratio, which stood at about 1.17% as of 30th of June. However, having said that, this is primarily because of agriculture loans. Typically in the first quarter of every financial year, banks record this agriculture NPAs in their NPA portfolio, and that sort of pushes up the NPA number for a brief period of time. If you remove agriculture out of the gross NPA number, then that stands at about 0.94%, which is largely flat compared to the March quarter. What we also know from the numbers that HDFC Bank has released is that the total advances were a little over 16 lakh crore, having risen about 16 odd percent. We also know that deposits have risen about 20%. However, CASA deposits, which is the low cost deposits for the banking system, that reduced as a ratio of total deposits for HDFC Bank. Remember that all of these numbers are standalone in nature. Currently, while the merger between HDFC and HDFC Bank has been completed, the effective date of that merger is 1st of July, and these numbers are as of 30th of June, and therefore currently we only have standalone figures. It will be some time before HDFC Limited's numbers are also audited and put out to the public. Also on Monday, the HDFC Bank shares traded as one entity after the shares of HDFC Limited were delisted last week. So now all the shareholders of HDFC have been issued HDFC Bank shares, and currently the share trades as one entity on the exchanges.
Meanwhile, private lender Bandhan Bank reports a 19% dip on year-on-year basis in its net profit. The bank's asset quality also deteriorated in the June quarter. BQ Prime's Vishwanath Nair spoke to Bandhan Bank's Chandrasekhar Ghosh, who expects the bank to see positive growth in the quarters ahead. Listen in.
No, I see that this is historically we have been seeing that it has happened in the first quarter, and second quarter onwards it has been coming again to start to go up. But what I saw that in April, May, whatever the amount have been declined, and June declined is 200 crores only. So in that sense, June has returned back to retain in the same amount, which will be continue from the July onwards. So that will be better way positive growth will be seen in from this quarter to onwards.
Oh, fair enough. Asset quality position, I know that in your results release you've said that this is largely because of those ECLGS loans, 3,750 if I'm not wrong, partly from CGMFU, and then you've got some from the other side of ECLGS as well. I just curious to understand, once these loans have been now recorded as NPA, the recoveries will end up going to the funds, right? Because they are guaranteeing the money to you. Have you received those guarantees, or how soon do you think you will receive that?
So CGFMU Guarantee Fund, we are second time have been applied to the government. So we are waiting to get it. Hopefully this month or next month we will be like to get it.
And stalwarts from the investment world came together on BQ Prime to help investors unlock the India opportunity. Listen in to Kotak Mahindra AMC's Nilesh Shah and Marcellus Investment Manager Saurabh Mukherjee's Lessons for Investors.
So what kept Indians behind in India compared to America. One can argue infrastructure. When you go to American cities, you find infrastructure. In India, it was missing. But anyone who visits American airport versus Indian airport will now say that our infrastructure is catching up. So hopefully that gap will be narrowed down. The real issue is encouraging entrepreneurship, having ease of doing business. That's where Silicon Valley and US scores over India. Hopefully policy making now will improve. The ease of doing business has increased, but it will one day reach American level. One day Indians in India will deliver as much performance as Indians in America. That's our potential. We could be 50 times bigger than what we are today if all of us get the same environment we are getting in America.
China's economic suicide, I don't think has any precedence in the modern era. And if we go to Chennai, if we go to Bangalore, we can see the rate at which China's economic suicide is transforming India. So tomorrow the world's largest machine tool plant goes live in Hosur, right? 2 years ago, had you told me that in 2023, India will open world's largest machine tool plant, 220,000 square feet. It's an unlisted company based out of Kolkata. The plant is in Bangalore. Fanuc in China has the world's largest machine tool plant for the last 10 years, 2 lakh square feet. Just to give some people a sense of 2 lakh square feet. 2 lakh square feet is broadly the area of 2 football fields. Right? The plant that's going to go on live in Bangalore tomorrow is 2.5 football fields. And on the same site in Hosur, three factories in parallel will go live, and the factories will be 100% occupied from day one. This is the impact China's economic suicide is having on India. Our pharma industry, our electronics industry, our defense industry, huge swathes of our medical device manufacturing industry will see exponential growth. So 3 exponential factors together make for a storm of change over the next 5-6 years. And it's very difficult actually to comprehend it even for people like us who live in the financial sector. I think what we're going to see in the next decade probably doesn't have precedence, certainly doesn't have precedence in India's history. I doubt even China would have seen what we're going to see in the next 10 years.